to the live stream here. I hope you guys are all having a great and amazing day. We're going to be breaking down some of the top stocks to watch for this month. Giving you guys really the top stocks this month, this week, this year. And you guys can ask questions either in the Discord group or you can ask them in the live chat, whatever you guys want to do. And if you guys don't have the Discord link, here it is for you guys. I'll just no limit, generate new link for you guys, and then boom. So you guys can just click that link, follow the directions, and then you guys will be good. So really, we're going to be breaking down, like I was saying, the top stocks here for this week here in this month, this year. We're just waiting for a couple people to get in here to the live stream so you guys can ask some questions and, you guys know what's going on. All right, let me make sure we are good and there is no internet issues. Another thing here, if you guys get anything in value, it really helps me out when you guys hit that like button. All right, so now that we are up, we are kind of ready to go here. We can kind of wait for people to come in. People will be probably coming in and out. All right, a stock here that I want to talk about is Lemonade here. Lemonade, I called this out last month at $63 a share, and it's really exploded up, hitting highs at 137. All right, do you think the momentum's going to continue? Well, looking at the RSI, we are crossing over overvalued territory for this stock here. So yes, this stock does have a little bit of short-term downward pressure, but the thing about it is, look at this. Okay, so we have this old resistance at 90, and honestly, it's just forming new highs. So I do think that if this stock sells off, it easily could tap this probably $100 mark, okay? So come tap it and then use that as support. I think that's a very, very strong possibility for this stock here, LMND. But the long-term potential for this is off the charts here. Really, Lemonade is an insurance company that focuses on millennial growth, and they have a mobile app so you guys can instantly get approved for all of your insurances. So they have pet insurance, they have homeowners, renters insurance, super affordable, and this stock has definitely shown that there's money in this company here. So LMND is definitely one to at least keep on watch. The strategy that I'm using for Lemonade is dollar cost averaging. The reason why is because it's a pure growth stock, and I just want to put money into this. I want to get that ball rolling. So really, I've been investing all up in here, okay, and I'm up 186% so far on Lemonade just because I bought in here, I bought in way up here, and at the time, I just knew it was part of the process. And then I averaged my position down and got it down to around $64 a share. And now it's at 125. And so the strategy that I'm going to be continuing to do is dollar cost averaging. I'm not even going to try to time this stock. It's too risky to do. But another stock here is Rocket Mortgage. Rocket Mortgage really had a beautiful IPO. You guys can see it exploded, hit $34 a share, and has been selling off, okay? Now, similar strategy with Lemonade here, dollar cost averaging this one. If I'm going to do one lump sum, I'm going to try to get it under $20 a share. The reason why is because you guys can see it. Taps it, buying pressure, taps it, and there's this opportunity right in here. Boom. Under $20 is a perfect swing trade for Rocket. And that's kind of my mindset for this one too, but I still think that Rocket companies does carry a lot of long-term potential because of the whole banking industry has been really doing very, very well lately. But they offer loans for businesses, for car loans, home loans, and this is actually the company that I am working with actually right now for a rental property. So it's getting approved and all of that stuff. So that's my next goal, is getting a rental. Building up a little real estate portfolio. The thing about real estate, though, is it's super expensive to even get into it. You always have to have 20% down. So right off the get-go, you have to have like $20,000. So it's a little more expensive compared to just $200, $100 a week put aside for all of your investments here. Another growth stock here that I think we all should talk about is Tesla. Okay, Tesla. This stock feels like we're forming new highs almost every single day with this company. So should you try to time this? Probably not, because you always have to understand, no matter what investment you are, each time a stock forms new highs, the risk level goes up. So with Tesla, you have to use the strategy dollar cost averaging. You really have to, because if you don't, you're going to get burnt out on a lot of short-term losses. And if you're somebody who can hold a stock and you don't care about, and you can just hold it and just roll with it, whether the stock's down 20% or up 50, you can just hold it, then you don't have to worry about dollar cost averaging if you can just hold it for the long term. But the beauty of it is you can just invest, $10, $20, $100 a week, and if the stock's up, you're still making money because the share price is up. And if the stock falls, you're just going to be averaging your position down. So I've been investing in Tesla all the way back in here, the beginning of the year, and I did buy a couple shares in 2019. But really, this stock here has proven to really just show us that fundamentals don't even matter, because this stock has a price to earnings at over like 2,000, I believe. So it's super off the charts. But the thing about that here is when a company has those, did we just lose connection? Are we good? Okay. When a company has all of those, super high price to earnings and everything like that, you always have to understand that that company carries a lot of risk. So a company that has a price to earnings over 100 carries a more risk than a value stock. A company that has a price to earnings at 30 or 40. The reason why is because when you invest, you're paying more in the beginning for these growth stocks in hopes that they become front runners in their sector. You're hoping that they dominate the sector, and that's what you're buying in when you buy into Tesla. Very similar to when Amazon was trading for $700. When Amazon was trading for $700 a share, they had a price to earnings at $3,200. And at the time, people thought, oh my gosh, why are you buying this stock? This stock's way overvalued. And now looking back, it's almost like you would have been foolish not to invest. So you always have to understand you're paying more in the beginning in hopes that the company does extremely well somewhere down the line. So that's what you pretty much get in when you get in with Tesla. But the whole electric auto space, look at Nikola. Look at this one, guys. Almost like a straight up pump and dump. Really, that's probably what it is classified as. Look at this. Stock was trading at $10, pumped all the way almost up to $100 a share, sold off all the way back down to $15. Literally crazy. But this stock definitely, I wouldn't even touch it with a 30-foot pole because it's too risky. It's not even a real stock. I don't even classify this as an investment. I classify this as going to the casino and putting all of your money on red, really. Another stock here that we can talk about is Apple. Apple, there has been some news that Apple is now getting into the electric auto space. Okay, they did file a patent, I believe, somewhere in 2020. I want to say it was in like March or April. They filed a patent for some electric charging patent. I'm not 100% sure on that, but there is rumors that they're coming out with the Apple car. So that's definitely something to understand, is when Apple gets into something, they go 100% in it. All right, there's no like, oh, we're just going to stick a foot in. And, I think that's something to understand here. Now, looking at this as a technical, resistance here at 140, definitely some short-term pressure here. Honestly, if you could hop in at 130, what's it at 134? If you hopped in at 134, risk $3 for it to come back down to 127. So you risk $3 to try to profit of $5. I mean, that's a decent risk and reward, but you'd be shorting. The stock definitely has an upward trend. So I do think you could possibly have a resistant breakout from 140. I think that would be a good entry for a breakout perspective. It would be around that 140 mark here. But if you guys have any questions, guys, go ahead and ask them in the comments here, because that's the thing about this is you are investing your time, and I want to make sure you guys get something in value, because that's my biggest thing is the biggest thing that everyone has is time. And so if you have any questions, concerns, or anything, ask them. There's no such thing as a bad question. And I'll give you my honest opinion. If the stock you're looking to invest in is a beauty, I'll tell you. And if it's something that I don't think, I'll tell you. That's just how I am. But we can look at a couple other ones. We can look at Delta Air. I bought in at $40 here. I still think it definitely has a lot of potential here. Price target for 2021 is around 55. I think that's a strong price target. Do I think it's going to come back up to 63? Probably not. The company did take on a little more long-term debt, but definitely this one for a short-term yearly gain easily could come up to 55. Best stocks for the long-term growth. Well, for me, long-term growth, I think we're getting more dependable on online shopping. So Amazon. I think that Amazon lately has just been really consolidating. AM, I believe, is the N. Amazon just has been consolidating here. I do think that what 2020 showed us is we don't have to go to a brick and mortar store to buy stuff. So I do think that Amazon is going to have a beautiful 2021 and beautiful long term. Another sector, marijuana. I think Planet 13. I think it's Planet 13. This is a marijuana stock. I do think that, yes, there is potential with marijuana. I think it's all about understanding and looking at the fundamentals. Planet 13 has probably one of the better fundamentals in the cannabis sector. And you guys can clearly see that, yes, long-term growth, upward trend, consolidated for a year. Now we've started to get that ball rolling. Thing about this is in 2020, this stock has performed extremely well. This company works out of Las Vegas, and Las Vegas, Nevada was pretty much shut down. And this is a retail store. So I do think that, yes, we are getting dependable on it here. So another sector is AI. So this could be companies. I believe I might have a watch list for AI. Let me see. AI right here. All right. So these are all the AI stocks. If you guys want to take a screenshot, but NVIDIA, I do think NVIDIA is going to have a beautiful couple of earnings. The reason why I say that is because back in 2017, if we go ahead and pull up this chart here, let's go to the 10-year chart week. All right, you see this? This was in 2017, okay? This was the overall price of Bitcoin. They made a ton of money off of Bitcoin because people started mining again and everything like that. And then we had that sell-off, okay? Major sell-off, beautiful growth, okay? This company is a AI giant. They are a tech giant. And I do think with the price of Bitcoin coming up, miners are getting back into the sector because Bitcoin's at $28,000 per coin. So that is crazy. And I do think that it really hasn't hit Wall Street yet. So I do think that NVIDIA carries a lot of potential. All of these stocks are AI. So if you want to take a screenshot, that's what I would do. But we can kind of just look at the charts here. Google, we have Salesforce, we have this other one here, AYX, we have Amazon. Amazon's AI. That's where they make a lot of their money is in data. So understand that. But Microsoft here, another AI. I can never say it. TWLO, IBM. IBM, I would try to stay away from, but it's technically in the AI sector here. Facebook, AI, and then Tencent Holdings here. And then if you just want to invest in a bunch of them, QQQ, that's what I would do. Have a base of ETFs for all of your long-term stocks here. But another sector I would recommend, it's hard to say, I think we have tech, so AI, I think we have cannabis, I think we have electric vehicles, I think. Oh, another one. Another stock here, Virgin Galactic. This is a high risk, high reward play here, but something to dabble in for only $23. Invest $100, get 5 shares, or just under 5 shares. Definitely, you risk $100 if you can't risk $100, I get it, but you should at least be putting $10 into a lot of these riskier stocks. That's what I do. I put like $50 to $100 a week into riskier stocks. The reason why is because if I'm right on one of them, it will outperform all of those other losses. And so Virgin Galactic, yeah, I invest in it. Is it a lot of it? Is it 10% of my portfolio? No, but it's 1 to 2% of my portfolio. And I'm willing to invest into riskier stocks with 1%. So, have that base ETFs, blue chip stocks, Coca-Cola, Microsoft, Amazon, a lot of them. I'll pull up mine right now. Hold on. Let me pull it up. I'll break down all of my long-term stock picks for you guys. Retail, okay. Let's go to it right here. All right, so automatically I invest 40% in the S&P 500. The reason why is because that's like a long-term. This is like long-term. I don't have to check the price on that. I understand that over the past 90 years, I get a 9.8% return on annual every single year, whether the stock market's going up, down. If I'm a long-term holder, I'll be completely fine. Then I take 10% and I put it in Vanguard's high dividend appreciation ETF. So this is like it's almost like an ETF for like dividend kings, dividend aristocrats. So you'll have holdings like Coca-Cola, Johnson & Johnson, Walmart, a lot of those. The idea of that is building up cash flow, okay? Then I invest 5% into QQQ. So that's like the AI tech stocks, okay? That's right here, QQQ. You guys can see beautiful growth here. I do think we're getting more and more dependable on tech. That's just my opinion. Then I invest 5% into Home Depot. That's a little risky, but I get it because of the dividends coming in. And I honestly think that when you invest into Home Depot has been around for years. And we are getting more and more dependable on, fixing our houses and everything like that. I don't know. That's just kind of my mindset. And you get a beautiful dividend of, let me see. It tells me somewhere on this darn app. I think it's like 2.5%, which is pretty decent. Then I invest 4% in Costco, and then I invest money into the total bond market, so BND. The reason why I do this is I almost use it like a holding of cash, okay? So you guys can see that it really doesn't move a lot. We had lows here at 85, or some highs, at 85, some more lows at 77. So it doesn't really move a whole lot. Maybe a couple of cents each day. It's up 5 cents today. What I do with this is when the S&P 500 or certain stocks fall undervalued, I will sell my bonds and buy those stocks. The reason why is because I understand that those stocks will have a better ROI, the return on investment. They'll have a better return on investment. And that's what I do. But in the meantime, before those stocks fall undervalued, it's hard to put your money somewhere that grows, and has little to no risk. So when I invest in the bond market, I get cash flow because it has a dividend of around 2.5%. So I'll have that dividend coming in, compounding my money. And it still grows. Since 2018, it's had an annual growth of anywhere from 3 to about 5%. And that's better than savings account. It's better than anything. And it's better to have your money working in some way than not working at all. And this is just a low risk investment. And that's what I use it for. Then I invest 3% in Apple, 2% in Amazon, and just a lot of other ones. Here, what I'll do, I wish there was a way I could, okay, what I will do for you guys is if you guys join this Discord, I will put a direct link to all of my long-term picks. Okay, I'll do it after the live stream because I don't want to pull up and I'll have to log in, and it's just a big headache. But For a riskier portfolio, like I said, I will still invest, money into riskier stocks because I want a lot of growth. So I'll have companies still like Apple, Amazon, but then I'll also have a company like Lemonade. I am up 179% on Lemonade. And that's just a riskier stock. And I only invest, $100, $200 a week in it. And it's outperformed all my losses. So all of those other stocks that's lost money in this has outperformed all of them. So that's why I do it. And then I still invest in the companies like Spotify. Spotify is an undervalued stock, let me tell you that. Adobe, AMD, Facebook, Square, Google, Tesla, all of those riskier stocks, guys. But that's kind of my mindset with them. Have a base of a solid portfolio for all your long term, and then have a little portfolio for all of your riskier investments. And that's kind of what I think. And then obviously have a solid IRA account, Roth IRA, for your tax purposes. So that's what I do. Try to max them out every year, and you guys will be good. And for all of your IRA accounts, just put them in ETFs. Don't even worry about picking and choosing certain stocks. The reason why is because over the long run, somewhere along the line, you will lose money. I can guarantee it. The reason why is because, so all the hedge funds out there, these are people who can actively, for their job, find certain stocks to buy and sell every day. They've only out of all of them, 4% beat the market. 4. Okay, and this is their full-time job. Then, of that 4%, 2% don't beat it the next year. So now we have 2%. Now, of that 2%, okay, you have to have a net worth of around $5 million just to even talk to these hedge fund managers. These are going to be hedge fund managers like Ray Dalio, Paul Tudor Jones, all of those guys. Those world-class traders. So in the meantime, it's better to have your time in the market rather than timing the market. That's just my opinion, guys. So I hope you guys enjoyed the live stream here this week. Maybe we'll try to do it again this weekend or so after the new year. I hope you guys have a great new year, great start off of 2021. And if you're not investing, this could be the year where you really focus on your finances and get your money right. So much potential I can guarantee this year will bring us. But like I said, we'll see you guys tomorrow in probably another video. Go check out my latest video. We talk about my top 5 picks for this month, and we do a whole detailed video on picking and choosing all my stocks, guys. So we'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and stay safe out there. Okay, guys? Have a good one. Take care.